She was looking to invest in real estate, and a condo developer's incentive for rate deals sealed the deal. I'm going to be analyzing this deal that is outlined in the Toronto Star article and kind of give you my take on this. Spoiler alert, I don't think it was a good deal, and I don't think this incentive was that great. But the reason why I wanted to highlight this article is I've talked about it in the last little bit with the last video talking about how, hey, I think the bottom is in for freehold homes. And also talked on podcast saying that, look, I think investors are actually back because I've been low-key working with a few just myself. So the reason why I want to analyze this is, yes, investors are back, but not specifically at certain segments in the market, specifically pre-con. And this is why I want to go through, this entire deal that's outlined in Toronto Star and show you what I normally do for my clients to show you what makes sense and what doesn't make sense, at least from my perspective. And like, no shade against this person or the Star. I think they're just trying to outline kind of some stories of how things are happening right now. But I just want to give you my take on kind of what's going on from, a realtor's perspective. And if you do want to work with me on your next investment, you can do so by booking a call with me. Use the link that's on screen. It's right here. It's www.chatwithzen.com. Simply click on the date and the time that works best for you. And then when you see the prop, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and if you're enjoying the content I'm putting out there, do me a favor and like and subscribe. She was looking to invest in real estate, and a condo developer's mortgage incentive sealed the deal. Look, I think in this video, because this is like something I actually do for my clients all the time. It's just now it's being posted on YouTube. But I'm going to show you and break down how some of these incentives work and why they are actually kind of just like marketing gimmick. And I feel like if this video gets taken down, it's probably because somebody sent me a lawyer letter. Okay, I'm just putting it out there right now. So the first thing that kind of talked about here that I highlighted is, look, this person's obviously buying a property as an additional investment. She owns a semi-detached in Markham, which, anywhere in Markham, you're looking at least $1 million, all right? And it turns out she picked a good time to do so as developers were offering incentives to sell units. The developers have been offering incentives since 2022. A lot of them, make up stuff like, lower mortgage rates, guarantee rents, free assignments, which there was before, no development fees. And this all has like a numeric value attached to it. And I'm going to show you why in a little bit, okay? So she was saying what made me change my mind was that they offered a 1.99 vendor take back mortgage for 3 years. And that's a saving of just shy of $1,650 a month. So we'll break this down, okay? So the question we'll be asking is the current interest rate right now, which most people are getting at 4.5% versus 1.99, a $1,650 a month savings? Yes, technically I did the math, it is, but you have to understand the complexness of this. So the first one we'll analyze here is a vendor take-back mortgage. What does that mean? It essentially means that the seller is going to give you a mortgage, and generally most of these are interest only. So you don't have the equity or the principal portion you have to pay. So therefore that monthly payment is much lower. So effectively, when you take occupancy of this property, right, which pre-con is, I think it's 2027 or something, right? You're only paying interest. So 100% interest on that property, less the down payment you put in, right? So obviously that monthly amount is going to be much lower, okay? So that's the first thing to learn, meaning that every payment for the first 3 years, it's not going to increase how much you own that property. It's just interest to the builder. And then after the end of that term, so in 3 years after the 1.99, you have to get a mortgage on it because you have to pay the builder back out the money they loan you, right? Now, this is a project in Pickering. It's called The Grand. I am able to find price lists and stuff. This is why I think it may get thrown down. Like this is kind of what I found online. And on the right here side, I basically just highlighted what the price per foot is. So in this article at the bottom, Urban Nation, which is a very reputable, research firm, says that price of a new Toronto condo, so pre-con, is about $1,361 right now a foot in the first half of this year, while Pickering condos are about $720 a foot. $720 maybe a little bit low side. I feel like if you go to something closer to the lake, we're probably like $800-900, right? But let's look at this price list right now from UC. So your lowest price right now, this is the hot list. You're looking at $585,000 or about $1,253 a foot. It's pretty expensive, right? And obviously as you go down, the unit size over here get larger and larger, and your price per foot gets smaller and smaller because you don't have to build as many kitchens and bathrooms. You're just kind of making more bedrooms, right? So that's kind of how it works. So when I look here, so you got 5% in 30 days, and then 2.5, 2.5, 2.5, 2.5. So basically that brings you up to 12.5% by 2027, and then $1,000 occupancy. So look, it's very inexpensive to put money down on this, but the problem right now is you're paying $1,250 a foot, right? So I mean, that's kind of my first qualms with it. Now, the reason why I want to bring this attention to you is this $585,000 price have the interest savings baked in, right? So I talked to a lot of my bank reps, and essentially a builder can't buy down the mortgage for you, right? In some way, shape, or form. But essentially, they can buy down from like a 5% to a 1.99% on $500,000 for about $32,000. So is $32,000 baked into their net cost? Potentially, right? Because at the end of the day, they're going to get their money slower. But over 3 years, at least they sell it for the price they needed to, even though they raised the price. So that's kind of why I wanted to run these numbers with you, right? So let's say, again, this is for very, very ease of kind of explanation. Let's say this was a purchase of $500,000 for this Pickering condo, not the $585,000 I cite over here. Again, nothing against this person buying this. I'm just saying this is what information I was able to dig up. So let's say it's a $500,000 purchase, 20% down over here, you're at 1.99. So the interest you'd be paying in the first 3 years, assuming this is actually principal, like pay down, because the vendor take back mortgage really is just interest only. That's why she was stating a $1,650 a month spread in the actual payment at $599 versus now. But let's say you do get a mortgage at 1.99, your total interest that you're paying on this is about $22,000. Okay. Now, if you were to get this exact same property, but your interest is at 5%, okay, which is not a high side right now, you're paying $51,000 in interest, which is a lot. And the difference is $28,000 in the first 3 years, right? So the question is, like my banker was saying, if you buy down the mortgage from 5% to 1.99, right? It's not 1.9, it's like 2.1 according to him, but whatever, right? Just example. But if $30,000 is the interest you're saving in the first 3 years of term, which is that 3-year term, isn't it better to just buy the less expensive property at a higher rate? Because come renewal, you are renewing on whatever you pay down. Do you see what I mean? Right? And this is the thing that a lot of people who are in this market right now not understanding. And there's a saying in real estate, which is basically you marry the price and you date the rate. Because the rate in Canada generally switches between the entire duration of your amortization, whether it be 25 or 30 year. So over time, when rates do come down, you'll be paying less. But everyone's so focused on the monthly amount with the rate slightly being higher that they don't focus on the fact that when you're buying something, the price is what you pay for it. You can't change it based on the rate, right? So everyone's too focused on that monthly payment, which again is a very normal thing because we've been, accustomed to that kind of lifestyle with like subscription models of everything, and renting everything and leasing everything, right? But the math for most people who understand finances, interest, amortization, and stuff like that, and this is why I've been saying a lot in the last week or so, investors are back, that these prices actually make sense because now that we're in a rate cutting cycle, that, hey, look, come renewal time, I think the rates will be lower. So this is why buying, call it, $30,000 off property at 5% interest is much better than buying it at 530 at 2% interest, right? So this is kind of why I want to pick this up. Now, the other thing I kind of want to highlight in this is that this is a pre-construction. Yes, maybe you're overpaying a little bit relative to resale, but if this property is occupying in 2027, right? So you can see over here at the bottom, 2027, don't you think interest rates are going to be lower at that time? So if you're locking for 1.99 and let's say interest rates get to like 2.5, what's the spread on that, right? So you just paid extra for no reason, and the builder now just pocketed more because the spread they have to pay down on the vendor take back from the bank, right, is much less now because rates are actually lower, meaning money's cheaper at the time. So this is a terrible bet, again, from my perspective, okay? Now, when I was to look at kind of like whether this property cash flows or not, look, I'm just looking at kind of buildings in the same area. Again, new buildings may rent for a little bit more over time, but when you have 300-400 units come online at the same time, there's usually a race to the bottom. So let's just say current market rents, okay? So I see right here with no parking, right? And I use no parking, you got $2,150 in rent. And the reason why I say no parking is because in this price list over here, you can say that you have to buy parking, which is like $57,000 or a little bit more for EV. So when I punch it into my calculator over here, you can see that at that cheapest purchase price at the hot list, assuming 2,500 property taxes, which is on the lower side, and then 400 in condo fees, which is about 80 cents on a foot. That's probably on the lower side by the time 2027 rolls around. At 1.99 interest rates, again, this has some, baked in principal payment. You're like minus $200 a month. Is this a good bet? Well, I mean, if you compare it to the cash flow numbers right now, if you were to buy a resale and rent it out, yeah, absolutely. Even at like today's rates at 4.5 and you buy a condo, you're probably like minus 400 or $500, right? If you get a really low price because the rents are, subdued right now. But you're also not overpaying for this in this example, right? This is $1,285 a foot versus $1,000, right? So you have 30% premium. Now, if you were to obviously close this at 4.5, the numbers look absolutely horrendous, right? Based on the rates. But again, I don't think we'll be getting there. Or this is an example, and one of the points I want to illustrate in this video, hey, why don't you buy now with a 4.5% down, right? You buy with a lower purchase price, maybe your cash flow is, it's $500 more negative than if you get 1.99, but you ultimately have a lower price and then rates will be lower come time for you to renew, right? So this is what I'm trying to illustrate, right? Like these are some of the thoughts and the numbers and kind of the ideas I'm kind of running for my investor clients right now. And they're looking at this, they're like, oh, I see. This makes a lot of sense. So ultimately, again, like, do I think this was a good purchase or a bad purchase? Who knows, right? Because in the article, they say that they want to ultimately retire there. So there's some personal aspect to it. But when I break it down from a strictly, can you get that resale product for less? Probably right now. But can you buy it with such little down at 12%? Absolutely not. So you're paying for the time value of what that money would turn into because the deposit's so low. So that's kind of call it the, gamble, the option, right? Or, kind of like the call for it. So it's not a bad thing. It's not a good thing. It comes down to personal preference and risk. That's why I'm saying like most investors, they just have to understand how these numbers work. And this is why I want to show you this video and how, what incentives builders are providing right now to kind of entice people to buy on the pre-con side versus like maybe buying with current rates right now at lower prices in the condo space because there's still some like high inventory and some like minor peak fear in the condo space as opposed to the freehold space. And can you buy something that makes sense versus kind of buying something in the resale market right now where, yeah, you're paying a lower price, but higher rate. But ultimately, I do think, there are some good deals on the resale side. And kind of what I've been saying throughout this video and last week and in a podcast, I think there are condo investors back right there right now. And, the numbers do kind of make sense when you run it like the way I have, right? So anyways, I hope this gives you an idea of what's happening in the market. And this becomes an illustration for you if you're contemplating, a pre-construction with some builder incentives. Just truly understand what the cost of that incentive is to you and your bottom line, not to the builders. Well, I guess you can do the builders too, right? But just understand the numbers, right? And if you do want to work with me to kind of analyze your next investment property, you can do so by booking a call with me using the link that's on the screen right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one or this one? You know what? Just watch them both.